拥有美国资讯公司的总裁 Craig Grant， 他认为这种想法是错误的。为什么呢？他表示，如果是从长期角度来看，你想长期投资升值的话，美国房地产相对来说是比较稳定的投资项目。接下来就是我们的专访。
Greg, how are you?
I'm fine, thank you.
Very happy to have you on my show. You just, before the interview, you mentioned you're now the first person started representing the housing market of the United States. Give us a little explanation what that means.
Right, the housing market as a marketplace. Okay, we're here at the NASDAQ exchange. It's a whole marketplace of different kinds of stocks. The American housing market has hundreds of cities, thousands of cities. Each one is different. Each one has different demographic patterns, job growth patterns, population trends. And so each one has different advantages for different kinds of investors. And so we're the first company representing American housing in this fashion to explain why one city might be a better investment for a specific investor than another city.
So we shouldn't consider you as a realtors because you are not directly trying to sell housing to individual customers. You provide information.
That's correct. And my company has a national network of real estate companies and realtors that we've trained and certified to do things the way that we do things, so that if investors come through us and we educate them on how to plan a portfolio with different places around the country to fill in the portfolio, we can then place them with different real estate professionals in each market who can help them source the properties, calculate the yields, and then manage the property in the future so it can be turnkey.
Mm-hmm. What kind of specific information do you think is the most useful for international investors?
It's a great question, because international investors, they're not here, and so they don't have to worry about whether a property is down the street from where they live. They have the entire scope of the whole USA to choose from. Mm-hmm. And the most important things are looking at the big picture first. Where's the population growing? Okay, population means demand for housing in the future. So where are the people moving? Where are the jobs moving? Where is the state government friendly towards companies so that more companies will move there, create more jobs? Where are the demographic patterns creating more demand for housing? And then on top of that, that gives you a long-term picture. And then you try to find places where the foreclosure crisis, the modern-day housing crisis, is hitting the hardest. Mm-hmm. So you find a market that's got pain right now, but has great long-term prospects to recover.
I think there's different categories of investors. Maybe some people just want to buy a house to keep their money
right.
or a property. Some people may want to use this as investment opportunity. Maybe a couple of years later they can sell or they can do something else. So can you give me a little bit of pointers on what kind of investors to look at, what kind of aspects of the market?
Well, the best approach in American housing is taking at least a 10-year view. People that want to get in and speculate, buy, and what we call flip, okay, mm-hmm. buy it and sell it immediately, those folks take a greater risk. Okay, residential real estate in the U.S. is a slow-moving asset class. Mm-hmm. So as an example today, timing is so critical because we've just gone through the worst part of a correction. So the housing market went up, it came back down again. Prices in many places around the U.S. right now are down further than they were in 2001. So we've given back so much value. But investors anybody who wants to hold the property for less than 3 years is taking too great of a risk. If you can see 5 years or even 10 or more, you can buy property today that will give you a 10 or 12 or 13% yield just based on the rent. So just based upon buying it and a tenant paying you rent, you can generate a better than 10% return. But that's not even including the appreciation in the future. So the investors, when we coach investors and educate investors, we try to have them link their investments to specific objectives that are long-term, like retirement, like financing education for children, things like that they automatically have a long-term view. That tends to give them the patience to ride the market back up again, which might take 8 years before the housing market finally finds a bottom, stabilizes and recovers again. So it's very much about patience and choosing your market well.